And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Sunday, October 3rd, 2021. The market on Friday decided to do a real push to get through their expiration, the Friday expiration. And this, I believe, was kind of a follow-up to Thursday, which of course was end of the quarter, end of the month type position squaring, which I felt was likely due to the expiration. So there was a big switch around. But Friday, I just saw kind of almost a reversal of what they ended up doing on Thursday. In any case, it seems that as we open here in Globex, that the likelihood that we're going to continue to go higher is fairly strong right now. Again, Globex has been open for 30 minutes. So much can change. What I have done to the count, where I continue to leave in the NASDAQ, or in the S&P, excuse me, an intermediate wave one low about a week ago, 2 weeks ago now, here at 4293.75. We did an ABC up, so we had intermediate wave two. I'm leaving those as is. And what I now can basically do here is that I'm pulling this minor wave one all the way down. And that just suggests still that I believe that this market can rally itself, but it's going to be in a wave two correction. And it's going to be extremely deceiving. Because remember, in a wave two, you can actually watch the market go all the way back and retest that 4472 area before it actually turns and then would collapse in the third wave down. So while I have now seen a couple of Elliottians who are kind of counting this a little bit differently, and which is fine. It's what makes a market, to be honest with you. But I'm still very satisfied that the highs for now are in, and they happened at 4549.50. So while there is an outside chance, and that's what I'm calling it, an outside chance, because in all honesty, we're not that far off of those highs. But so that's why I still believe we are in the very initial infant stages of what will ultimately be a multi-year corrective phase. But you can already see how it's starting. There's going to be plenty of downside. There's going to be plenty of upside. And that's what I'm going to continue to say. The trading opportunities throughout, I don't really expect this to get dead slow with low volume to likely the B wave. So I think we got a lot of activity, a lot of movement, and a lot of shifting around of money, of which we hopefully can step in and grab our portions. In any case, therefore, based on that, and based on the size of this correction, I'm just going to do let's just do a quick review. I did say that this one would be a little bit longer because I really want to make a point of how I'm coming up with the top being where it is. And while there remains a possibility that the degrees are off a little bit, or something within this last leg up needs to be adjusted, but I don't see it right now. So in any case, the size of the correction, if we go all the way up, if I'm even doing it on a cycle level, the cycle 5 completed up here at 4549.50. That tells us, and if I go one above that, if we're looking at including the Dow Jones Industrial Average, then I have data back to 1921. If I go and look at the SPX, I have data that goes back even further. I go all the way back again in this one, I believe also to 1928. This is the S&P cash index as followed from 1928. There I can go up to a supercycle degree. That's pretty high. So in essence, what the market has done is off of the crash lows. And so in this particular market, that was July of 1932. that's where this rally phase that we're finished with now began. So what point is it for me to say the size of what I think this correction is going to be? Because now I have to scale it all the way down. But I want you to know that, yes, it's just the finishing of a third wave. So there's a fourth wave correction and then yet another. Tell your grandchildren there will be another massive rally to come once all this corrective phase is done. Massive rally, folks, massive. So, but first, we need to correct. And it could take between 5 and 10 years to do it. That's the big, big picture. Now, in between all that taking place, this market is likely going to work its way down to this zone under Elliott. When you're in a correction, the correction, I'm finishing 5 waves. Okay, so we finished 5 waves of cycle degree. We're now looking for a super cycle wave 4 correction. It is pretty strong guideline that the 4th wave correction will find its terminus, its endpoint within the price territory or close to the terminus of the 4th wave of 1 lesser degree. That suggests that ultimately cycle wave 4's price theory comes into play, and the potential and the probability over the long term, multi-year term, the S&P 500 cash index should end up back to where it was in February of 2009. So basically what we are correcting is a pretty big 5th wave rally. And we're just going to go back down to the ending point of the previous 4th and launch again, but in a much bigger 5th wave. And again, have to count out 5 waves of cycle degree. So there's still so much more to come. But how many people will be here? How many people will still have, all the rest is still unknown. But I will tell you this, that's a maximum monthly chart. It goes pretty far back. Now, if I need to take that all the way down to a 4-hour chart, here's what it looks like. And we're already reached that high. And now we're just beginning to correct. And look how infant it looks. Go up to the daily chart and you can see how infantile it looks up here. That's why many will call it, oh, this is 3 waves down, because that's how the patterns have gone. But I'm telling you, if we don't count it correctly, there's only so much you can extend and keep extending. Now, if that's what the market is truly telling us, and then that's the choice. But on the cycle, on the level that it's at, even that reaches a pinnacle and turns. Now, the question always remains, what's going to turn it, how's it going to turn it? The easiest answer I can give you is that if you take a look, this is the pecking order according to Michael. Sitting up at the top are interest rates. Interest rates rule everything. They rule how business is going to transact and who gets to do it and at what price. Okay. Next down after that are the currencies, the individual currencies around the globe that are major players within Forex and within trade, et cetera, et cetera. Interest rates, currencies, equity markets, and commodities, et cetera, et cetera. So the pecking order, that's, what's going to control movement in everything below it? Interest rates, then the currency, and then our equities, corporations. The bond market has its own sub-levels. So it's all in there. But interest rates is the bond market. So in any case, I think that this market did reach its top. And this is still 1, 2, and we're futzing around in another 1, 2. And it's going to be 1, and this is on the daily. So it's still 1, 2, 1, 2 of this building third. So that's on the SPX. Let's go back and look at the ES where we have our count. Can't really see it because again, daily chart, and I don't want it to be so big. I can't look at it. Let's try that again. Yeah, a little bit big. So I don't like that one, but I'll go to the 4 hour and that back over too. So the daily, like that. Computers, give me a favor, just agree. Thanks. So we still have that 1, 2, 3, 4, 5. That's one. And I'm still very satisfied with that. I didn't like a lot of this, but I'm satisfied with the count. I'm satisfied with an ABC for a 2. That then produces 1, 2, 3, 4, 5. 1. Now, if we're in a 2, what are the possibilities for wave 2? What we have, we've already exceeded 382. We've already come up and touched 50%, which sits at 4,366, we'll call it. But we still have potential. We can go up now. Again, right now, the 20 is beginning to curl higher on the 4 hour chart. So that's why I'm beginning to favor we continue to have some upside pressure. So next up, we're going to see 43.74.75. It needs to break that level, which again is the 50-day moving average. That then clears the path to get up to 618 on a Fibonacci basis, and that sits at 43.90.91. Now that may contain it, but if it's intent now, but they don't pay attention to Fibonacci, they pay attention to moving averages, there's then going to be the high potential that at least moves up to 44.09, which is a Fibonacci level, but then we have the 200 right above at 44.20, and that stays in play for right now. Now, whether it does it tomorrow, that would be another massive rally. And what would generate it, I don't know. But it is, and it has potential. The market has as much potential to stop here, turn, and just continue to go down. So let me bring this down to an hourly chart. We can look at the internals of this rally thus far. Let's see if I can open this up now. Come on. See, it just gets to be a pain. So it doesn't want to open. There you go. Anyway, so what we have, I believe, could be, they're pretty close. If right now, it would end up as a 3, right? A, B, C, 3, and you could put a 2 there and down we go. But that doesn't look right. So even that could be A, B, 1, 2, 3, 4, 5, C, and still turn down. So that's why we allow these levels. And I'm calling it a wave 2. So that's why I still feel very strongly that eventually we're going to turn and the markets will find reason to sell more than they will find reason to buy. And we even saw that on the opening today. There were sellers out there on the opening of Globex. Now they just come back and they're going to ignore everybody. And they're just going to buy it at least for the next hour and 15 minutes until Asian markets start to open. Then we'll see. But upside potential for tomorrow. So we brought it down again, taking a review of the long-term picture. Now we're bringing it up to the near term, and now we're taking it right down to tomorrow. So we have wave 1, we have a second wave, we can come up, we can test the 200-day moving average that's on the hourly chart that sits at 43.78, I'm going to call it. But the zone, you got to think is 75 to 80. Give it a 5-point zone right there. If it goes through with some force, then you're heading up to that 618. Which is at 43.90. We do have potential that we could get up to 44.10, but then that likely is going to turn this back into a 1, 2, 3, 4, 5. And that's going to produce probably a larger correction. I'll count it. We'll see what it looks like. If this is A, B, and that's 1, 2, 3, 4, and we're still in that 5th, but I wouldn't suspect that it's going to have so much power to get itself up to here. If this is an ABC, then I'm kind of looking for this zone to complete it. And then for this decline to begin again. And that's what we're going to leave it for right now. I still have a lot more confidence in the downside than I do to the upside. I think the market is kind of making itself clear little by little. And this is where I'm going to leave it. Our next update will be on Monday, October 4th.